Yo, what's up, guys? I want to show you a few stocks I actually just bought. One of these stocks I've never owned before, and I'm liking the risk reward on this stock. We're going to show you all the numbers for yourself so you can kind of draw your own conclusion. I'll just get straight to the point here. I don't like wasting your time. The first stock I bought was AMD. I bought 12 shares of them at $126 average cost. And I normally don't buy stocks that don't pay a dividend because AMD does not pay a dividend, but I want to show you why I like them so much. It's actually because I don't have exposure to the data center industry. And check this out. I'll be quick with this. If we look at AMD's data center revenue, which is 52% of the revenue now, look at the growth here. I mean, this is some ridiculous growth. It went from 1.3 billion to, in the most recent quarter, 3.5 billion. It's up over 122% year over year. So I'm loving this segment of their business. They also have this client revenue, which isn't a huge segment of their business, but it is up 30% year over year. If we look at like their embedded revenue, though, this is actually down 25% year over year. But that's only, what was it, 13% of the revenue, not huge. Anyway, I like AMD for the data center revenue growth. And if we look at this company's numbers, like look at the free cash flow. That's what FCF stands for. They made 500 million of free cash flow in the most recent quarter. And if we look at their net income, the net profits, they made a lot of net income. It's up 150% year over year. That's mainly because if we look back down here from 1 year ago, the numbers were really getting hurt. They even lost money that one quarter. But now they're actually starting to fix that trend. They're starting to make a lot more money. That kind of explains why the stock is kind of flat over the past 2 years. It's because they were kind of losing money at this point. There was a lot of skepticism. But look at their amazing balance sheet. They have a phenomenal balance sheet. How much cash did they have on hand? So they have $4.5 billion of cash. It's there on the top right there. So $4.5 billion of cash with $5.4 billion of clear and free inventory. So you can kind of add that to the cash if you want to do that. And let's see how much total debt they have. I know they have a lot more cash than debt. So yeah, total long-term debt and capital lease obligation is 2.24 billion. But 1.7 billion of that is their long-term debt. But anyway, AMD is in a very healthy financial situation. They have double the amount of cash as debt. They're a growth company. I like the data center industry. So that's kind of why I picked up, 12 shares of AMD. I think I'm just going to hold this one for the long term. I don't have any other exposure to this industry. I don't own Nvidia or anything. I guess I do own Google. Did y'all see the news of Google made their own quantum AI chip? It sent the stock to an all-time high. Look at this. Google is at a record all-time high. As of today, they hit over $200 a share today. So we're now up over 20% on our Google shares. I'm a very happy Google shareholder. And let me show you my dividend history real quick. If we go over here to my dividends, we just got $2.60 from Google, $9 from McDonald's. We get the monthly dividend from Realty Income and Constellation Energy. So this is kind of our dividend history if you're curious. We're going to be doing a stock portfolio update in a little while. And one other stock I just bought, which isn't very popular, but you've probably never heard of this one, but I really like CubeSmart, ticker symbol Cube. So if you like high dividend yields, check this one out. They have a 4.48% dividend yield. So that's what I really like about CubeSmart. So we've kind of been buying some shares over the past couple of days here. This is in my Moomoo account where once I buy a stock in here, I'm never going to sell it. And most of the revenue is their rental income. But if we look at their property management fee income, this is all really high margin for the company. It's up 11% year over year, and their other property related income is up 13% year over year. So at least that's growing double digits. And CubeSmart is actually a real estate investment trust, a REIT, and they actually have to pay out most of their income in the form of dividends by law. So that's why they have that abnormally high dividend yield. And this is the number we want to look at. In the most recent quarter, they made $145 million of core FFO. Is you don't look at net income, you look at that number we just did right there. And look at this, their dividend only cost $115 million. So they do have a healthy and sustainable dividend payout ratio, and they even have a little bit of room to raise the dividend. Another thing I like to see is if you look at their total common shares outstanding, you're not being diluted at this company, or 0.5% year over year, pretty much nothing. So that's what I like about CubeSmart. The only reason CubeSmart has gone down so much, if you're wondering are they going down so much, it's all the REITs. It's mainly because they're following bonds, and they're thinking that interest rates are going to get cut slower. So it's not great for the real estate investment trust, the REITs, which heavily rely on getting capital at low interest rates. All right, you guys are going to call me nuts for buying this stock right here, but I've been buying more Constellation Energy stock. You know, the one that hasn't even been public for 5 years, and they're already up over 400%. But I still think the valuation right now is pretty decent. And here's a cool fact about this company. Out of all the US nuclear energy facilities, out of all of them, Constellation Energy owns 55% of them. So think about that. If you want to get exposure to the nuclear energy industry, this is the largest way to get exposure to it. So that's why I'm buying Constellation Energy. I think the future will literally be powered by Constellation Energy. And the valuation isn't even nuts right now. Check this out. The forward PE is a 23.85, which for a utility, it might be a little bit expensive. But check this out. Here's why a lot of people may not like this one either, but here's why I like them. They have a 0.6% dividend yield, which you may think that's a super low dividend yield, but they have an incredible amount of room to raise their dividend. Look at this. When they went public in 2022, it was literally 14 cents. Now it's 35 cents, so they've doubled their dividend. But anyway, let me show you the numbers for yourself. We'll look at their numbers, then I'll show you a couple slides from their investor presentation. It's super impressive. So if we look at this company's net income, in the most recent quarter, it was $1.2 billion. So remember that number. Just in the most recent quarter, it was $1.2 billion. And their dividend per one quarter only cost $110 million or $111 million. So they literally have like a 10% payout ratio, an extremely low payout ratio. And this company buys back a lot of their own stock. So you now own 2.8% more of the company. So that's what's more important. Yeah, you get the 0.5% dividend yield, but you buy them also for the stock buybacks. Now, if you notice, they actually did not buy back any stock in the most recent quarter. And also just notice, their dividend only cost $100 million. They spent double and triple that on buying back their own stock every quarter. So point being, they're a very shareholder friendly company. Anyway, they didn't buy back any stock in the most recent quarter because they hit all-time highs. Remember, if they have, room to spend $500 million a quarter on share buybacks, look at this company's total long-term debt. Look at this. It's actually only $7.38 billion. So they have very little amount of debt, and it's actually down the two most recent quarters. So if we actually look and see, let's look at their cash right here. So they have $1.79 billion of cash, even after paying out the dividend and doing the share buybacks. But I want to see, how much did they spend? Yeah, so look at this. Whenever a company issues debt, it's right here. Like they issued all this debt right here. Well, in the two most recent quarters here, probably because they're not buying back as much stock because it's at all-time highs, they're just like, all right, we'll pay off debt. So they spent $700 million in the most recent quarter paying off debt. And remember, they still have cash on hand of what was it, $1.79 billion. That's why their cash is sometimes at only $300 million. It's because they're paying off debt or doing share buybacks or something like that. Anyway, I really love this company, even though they're kind of close to all-time highs. I think that right now is a decent time to buy them. So I've been buying them. And let me now show you a few slides from their investor presentation. They're super impressive. So check this out. Here's Constellation Energy, larger than all their competitors, larger than NextEra Energy, Duke, they even got Berkshire Hathaway Energy. They're the largest producer of carbon-free energy. And, here's their nuclear generation. They're the largest exposure to the industry, more than VST, NEE, all the other ones. But here's another really cool slide right here. If you look at their EPS right here, here's the revised guidance. In the middle, it's just $8. Remember, their dividend only cost 35 cents a quarter. So they have a super low dividend payout ratio, which I love. But here's what is another great sign. They expect to just CAGR their EPS 10% every single year, all the way up to 2028. So they see visible 10% adjusted operating EPS growth on a base earnings. So that's what I love. And here's what they don't include in the growth rate. Inflation greater than 2%. Whenever there is inflation, that really benefits this company. And, all these other things right here. Commercial margins above the 13-year industry. They've actually seen some right now above market margins. I probably worded that weird. But anyway, I really like this company. You can kind of read more into here how they expect to do this right here. But anyway, I love this company right here, Constellation Energy, pure nuclear industry play. And let me know in the comments if you would or wouldn't buy any of these stocks. Let me know if there's maybe some context I'm missing here. And if you want to download this app right here, it's called Moomoo. If you go to the first link in the description, I have an affiliate link so we both get some free stocks if you sign up. I really like how it breaks down the company's numbers. Like we can see AMD's data center revenue growth. Like it's just super impressive to me. So I like this app right here. First link in the description. And don't forget to drop a like on the video. That helped me out a bunch. And I'll see y'all in the next one. Y'all are the best.